Good morning, ladies and gentlemen. Welcome back to another pre-market watch list here today. Thank you guys once again for tuning in. If it's your first time joining in for today, good morning, ladies and gentlemen. Welcome back. Excuse me, I had my speaker on. So once again, thank you guys for joining in. That might turn out a little loud on the video. Sorry about that. But anywho, good morning, guys. So as you can see by the headline of the video, got a few stocks here on the watch list: Netflix, Tesla, MTSL, ACHV. And those are going to be the main focuses for me today. Oh, maybe forgot about Twitter. Might want to watch Twitter today as well. That might be one we're going to take a look at. But anywho, what's going on, guys? Good morning. We're going to go ahead, start sharing the screen and get into it. So 1 second. Yo, yo, yo. What's going on, Mr. Cornett? All right, I'm going to share the screen here and we're going to get rolling. So again, guys, first couple stocks on the watch list. Got two higher priced ones and then two of the lower priced penny stocks here this morning. All right, so let's get into it. All right, so I'll cover Netflix first. Netflix is the first one I'll kind of mention here. So as I mentioned yesterday, I believed that we were going to see a red day on Netflix due to the fact we were approaching the 52-week high at 423. We reached a high of 420s yesterday, and then we started to pull back. So I'm thinking of playing Netflix short today on the idea that what we're doing is performing into a small double top here, in which we're going to start seeing Netflix pull back a little bit more. Not to mention, the market also went red yesterday. The market's gapping down this morning. So considering the market's gapping down, that's probably pulling a lot of these tech stocks down as well. So today, going to be watching Netflix short, playing on the idea that Netflix is in a double top pattern, at least a small one. The market's gapping down. If we get, a red day in the market, that should also help accelerate or kind of be a little bit of a catalyst to help pull some of these tech stocks down in the same direction. All right, so good morning, native gamer. So again, going to be playing Netflix short today, hopefully. Let's put it that way, hopefully. So if I go and we look at, let's just do a 5-day chart here. So you can see it popped up to 421, then it kind of came down yesterday. Now it's gapping down again here today. So I'm going to be watching Netflix short. I have a bunch of key levels mapped off. So all these red lines are just areas of potential resistance, supports, which I just mapped off. So if you go to a 20-day, 4-hour chart, you can map off all these same levels that I have. So you can map off the 52-week high, some previous bounces, previous resistances, and you should come up with relatively the same kind of red lines I have here on my chart. But today, specifically, if I want to get short, it's probably going to be around $413. Okay, so I'm going to be watching Netflix potentially short around the 413 area. As you can see, it's pushing up pre-market here. So I'm playing on the idea that once Netflix gets up to, and it's basically there now, to this 413. Which is right there. Once it gets there, I'm going to be looking to short this because, well, a couple days back, it kind of played around with that 413 area. Then it broke up above it. And then yesterday it came down and it bounced right at about 413. Then it went back up and then it bounced right at 413 again. Then it went back up and then it faded through 413. Bounced pre-market today, and now it's heading back up to that 413 price. And I believe once we get up to it, or we're almost there, we should start seeing some sellers come back in and start pushing the price back down, in which I'd look to get short in anticipation we'll move back down closer to 410. And excuse me, that area I was talking about is actually 414, not 413. So that's just it. I'll go over it again. And we'll do a 20-day chart now. We'll just look at it like this. So again, right, Netflix had previously bounced at about 410 right here, and then it's seen resistance at 410 here. We broke over 410. We popped up to the high of 420, which was the 52-week high. We started selling off. Now we're coming down. And if we go into a 5-day chart, you'll now be able to see maybe a little bit clear what I was talking about. Now that we look at a 5-day chart, you can see that this, in like an intraday, we kind of fiddled around the 414 price a couple times. We broke through it. We bounced off 410. We're coming back to 414, and it's expectation we're going to start heading back down off the 414 level. And if the market goes red on us today, that should help pull the price of Netflix down as well. So you're going to be looking to enter short on Netflix right around the 414 area. It might pop over that briefly and then come back down. So we'll see. That's kind of my game plan. If it didn't reject off of 414, then I probably won't want to even long it. We might see it get a little choppy. So that's a game plan. Short Netflix around 414 area with the first target of 410. Yep, that's the first game plan. Next one on the list, we'll go straight to Tesla, and we'll talk about the other penny stocks. So, it's interesting. I really thought Tesla was going to have a phenomenal day yesterday, and it just didn't. Same thing with the day before. Well, it did have a good day, on Monday, but not what I was thinking. So getting a little shaked out on Tesla here, and that's okay. But I'm thinking Tesla might be along today. Again, if the market pulls really hard, it might cause Netflix to go down as well. But let's look at a 5-day chart here. So if you look at a 5-day chart, you'll see, pre-market. What was that? This would have been last Thursday. Last Thursday, pre-market, Tesla could not break through the 315. Actually, I'm gonna get these old drawings off. One second, guys. Okay, so back last Thursday, you could see that Tesla could not break through the 315 price, and then so you can see here, Tesla just couldn't break through 315 once, twice, 3 times. It eventually broke through here, popped up right to about 330. 330 was resistance from a couple days, actually probably about a couple weeks back, maybe. So this 330 price was a previous support area, which you can see here. Tesla bounced on 330 once, twice, 3. So going straight across, Tesla's seen resistance right at 330 yesterday and sold off. Now, if we go back into a 5-day chart, now if you go into the 5-day chart, you can see Tesla rejected the 330, and now it's coming down to this previous 315 area, and it's starting to hold support here. So if this 315 can successfully hold up, I think there's a strong chance we might see Tesla bounce this 315 area and start moving back up. The yearly chart shows that yesterday on Netflix was just a pullback, right? So we had our big dump, we bounced a little bit, and then we had a red day, but the red day yesterday also held up right on this 50 moving average, which is this red line. It held support there, which is a strong sign. It's a good sign. So again, going to be watching Tesla to the long side today off that 315 area if it can hold. If it breaks 315, you might want to consider possibly watching it short bias. Okay. So it's possible only if 315 holds. There might be a little bit of a bounce for a long play on Tesla. So that's what I'm watching here today on Tesla. It's a little bit of a long off 315. Now we'll head over to the ones that everybody's talking about. Everybody on StockTwits is talking about. Everybody in every single chat room is talking about. So what are those stocks? The first one is MTSL. So MTSL, many know that it started at $1 yesterday, ramped up, made a bunch of people a bunch of money yesterday. So MTSL was the major penny stock to kind of play yesterday. It went up after hours and went even higher in pre-market trading today. So first, before we map off any levels, I do want to talk about the yearly chart. As you can see here on the yearly chart, every time MTSL spikes up, it ends up crashing. So that is what I expect is going to happen today. We're most likely going to see MTSL crash and burn. The only thing that throws a little curveball at us would be the volume difference. As you can see on these days, back here when it spiked, here when it spiked, here when it spiked, here when it spiked. So all these areas when it spiked, look at the difference in volume, little volume, little volume, little volume, little volume. But today or yesterday, massive volume, big spike. So that's the first time we've seen MTSL have major volume associated with a big spike. So to think that it's going to act up exactly the same as all the other recent spikes, it's not as likely, but it's very possible. So still going to play on the idea that MTSL is most likely going to fail today, and it's going to have a big red day because normally that's what it does. History tends to repeat itself, and history is telling us that MTSL spikes and crashes every single time. So today, I would most likely be watching MTSL for a short position. Before we can, 100% say it's short, let's go ahead and mark off the levels. So we can mark off yesterday's high. That's kind of it. You really just have yesterday's, high of day to mark off. And then you can kind of look for, maybe this $3 area as a support area where it might bounce today. So based on history, I think we're going to see MTSL have a major red day, but I do believe that there is going to be some type of spike before it goes crashing. I think we might see like one of these little early morning spikes, then it gets sold down, and then we start crashing. Okay, so do watch, be very careful on MTSL today. Do expect it to have a massive red day. Okay. All right, next one on the list is ACHV. So ACHV, I believe might. So this is what I see happening. I don't honestly think ACHV is going to break 585. I think this 585 price is the highest ACHV is going to reach today, based on previous history. Oh, that's too far. Let's do a 180-day 4-hour chart to work. So if you look at this 180-day 4-hour chart, MTSL popped up to a high of like 615. This basically the $6 area, 585, and then it sold off. So as you can see today, right? So MTSL popped up to 585, dropped, popped up just short of 585, really dropped, consolidated, goes through a small short squeeze up to 585, and now it's starting to sell off. So I would expect that this 585 area is going to be a major resistance. Not to mention, if I zoom in here, you can see that 585 is a previous price point resistance, and there's also the 100 moving average, which is the green line, heading right into that same price point, which is right there at 585. So not only do you have price action resistance, you have moving average resistance coming right down to that similar price point of 585. So you kind of have a double resistance there, right around that $6 price point. Secondly, if I may, ACHV. Back when it had that big push a couple weeks back, you can see this when it kind of spiked. Kind of same thing. Look at the volume, massive volume, and it still did not perform very well. Versus look at today, very little volume in comparison to the last time it spiked, and it has a big green. So I'm expecting that this is going to fail, and we're going to start seeing our ACHV kind of fade out for the day. So I don't expect we're going to see ACHV break through 585. Based on its history. Could be wrong. I will mention that so far this morning, it is holding up pretty well. It did go through its spike, and now it's just kind of consolidating. When they do consolidate like this pre-market, they do also have a strong chance of going through a pop. So that's kind of it. If I were to play this, I would have to watch ACHV long above 530s or even like right around the 540, maybe 550 area, somewhere right around that area, right around 540, 550 long, with a first target of 585, and that's where I'd look to sell, because I know that if this does reach up to 585, this price point is where a bunch of people are going to look to get short. Okay. So if the price does actually go all the way back up to 585, you're going to have people that bought it here, bought it here, bought it here, bought it here, all looking to sell at 585. And then you're also going to have all the people that want to short the stock try to short it at 585. So you're going to get the short sellers selling it, and then you'll also get long bias traders starting to sell it. So you're going to get a mix of both short sellers and sellers looking to short it at 585, which I think in return could really cause the price to drop. On the same note, we have to play both sides of the field, which means that it's very possible if we do get up to 585, the buying pressure could be so strong in anticipation to break through the pre-market high, we might in fact pop over. But I think we're going to see a red day ACHV. All right. So those are all the stocks that I'm going to be watching carefully today. Other than that, I didn't see a whole lot else that I was super interested in. But yeah, I'll take a second here to go over some of the stocks that you guys are looking at. So first one here is AST. AST, very light on volume. I would not trade that. It's a small gap up. All right. So we have our gap up, low volume, crash, sideways consolidation. Most likely no go. Okay. Oh, Twitter. I would like to talk about Twitter. Twitter was one that I forgot to talk about. So I don't know if you guys tuned into the live stream yesterday, but Twitter did basically exactly what we kind of expected. It would pop up and then it hit one of its resistance points and then just went crashing down from there. So for me personally, I don't know if I'm going to trade Twitter today, right? So let me talk about this for a second. You have this big red move on Twitter, right? And then followed by a massive short squeeze. Look at the volume. Look at the volume here on Twitter. Look at the volume yesterday on Twitter. So you can expect today that the volume today is probably going to be like this, even smaller. So less volume, less of a move, not as much to trade. But personally, I would say to watch, I would watch Twitter short, honestly. I'm not going to go too in depth with it. There's a couple scenarios that can happen, but I'm still more short bias on Twitter than anything. And if Twitter does go red and have a big red day, we could see Twitter as low as $30 today. That would be a pretty big drop. Or wait, not $30. Sorry, that was wrong. $40. You can see Twitter as low as $40, which is the 50 moving average. So if this thing really is pulling back hard and dumping, we'd most likely see it pull back to this 50 moving average and then start bouncing. So I'd watch Twitter short initially. Maybe try and grab some shares long around the $40 price point. All right. FAST, let's take a look. Fast, this is an earnings play today. So yeah, I did look at this. Not that I'm not interested in it. The only reason I'm not focusing on FAST is because of the pre-market action. This pre-market action is very light volume going up, so I'm not a huge fan of this. Unless this picks up in volume in the trading day, I probably won't trade FAST. If we look here, yearly chart, price is what? Price is 53, 53, 53. So yeah, FAST basically gapped up right into a bunch of resistance. So I don't necessarily think we're going to see too big of a day here on FAST. It's probably going to settle right around the 53, 52, 54 price point today. Thank you, Joel. Appreciate it. Google, let's see, NFEC. NFEC, take a look here. NFEC, very, very low volume. Would not suggest trading NFEC. That's weird, Daniel. Let me hold on. Maybe I'll update the TradingView link, Daniel, and get a new one going up there. So Last one I'll touch on is IQ. I'll look at XXI. I haven't seen this one in a while. So XXII trades okay volume, medium volume. Let's see. It's pulling back right now. Let me put it this way. For as long as I've been trading, XXII has never been that amazing. There's been a lot of hype around it that has gotten it. So basically back here, let me explain this. Back here and throughout this time period, XXII was an extremely pumped. It was an extremely pumped stock through chat rooms, stock twits, Facebook groups, et cetera, et cetera. I seen people pumping, and when I say pumping, I mean everyone was like, oh, XXII is a great stock. Keep XXI on your watch list. XXI to the moon, blah, 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 blah. And of course, I would never listen to any of it, but many did, and that's what caused a lot of these big moves here on XXII was all the pumping going on through chat rooms and Facebook groups and stock twits and every other stock place imaginable, and that's what caused these big pops here on XXII, and it hasn't really done much. So for me, XXII is a stock that I'm just neutral on. I don't ever want to trade it. It makes okay moves. Like this move here is okay. This move here is okay. But for me, it's a neutral stock. It's not something that I necessarily ever even look at anymore. So personally, I wouldn't even mess with XXII. Last one I'll look at is IQ. So IQ didn't go long yesterday. I think it tried to initially hit pre-market resistance and faded out. So for me now, I'm just going to be, I'm putting IQ into neutral stock for me right now. It still trades high volume, but I need to wait, not necessarily wait, but what you can see here is it's dropping and now it's kind of doing this. So what I'm waiting for on IQ is because it touched the 50 moving average. It bounced a little bit, but not a significant bounce. Now we're getting a red candle. So ideally, what I'm looking for on IQ at this point is for it to hold above the 50 moving average, which is the red line. I want it to hold above the 50 moving average and just start getting squeezed into a consolidation. So I want to see the price action of IQ start doing this. Just go sideways and hold above the 50 moving average and hold above, this price point of $30, somewhere in there, to the point where it goes through such a long consolidation phase that it has to either break up or it has to break down. Because right now it's becoming more of a headache than it is fun to trade, because we're not seeing significant days. We're not seeing big red days. We're not seeing big green days. Now we're just seeing these short little intermediate plays throughout the day, which are good for scalp plays and a few plays, but the profit potential is really diminishing on IQ. So now what I'd rather see happen is just wait for it to go into consolidation, get squeezed, and then look for a pop out of the consolidation here in the coming week. So for now, it's neutral and just on the back burner. Tony, no, it's really not, because there's way more to inverse ETFs. If you're talking about trading ETFs in relation to the stock market and stock market volatility, then that's definitely not a beginner approach. It's not that you can't make money or you can't trade it successfully. It's just there's a lot more to the inverse ETFs. Oh, excuse me. There's a lot more to inverse ETF relations in the stock market than most people even know. Probably more than even I know. There's probably some things about them that I still don't know to this day. I don't know everything. I really don't. I know a lot, but I don't know everything. And what I can say is that inverse ETFs for beginners, not really a go-to best move, because there's way more to it than just price action, support and resistance, things like that. It really comes down to understanding the flow of the market and understanding volatility in the market And in order to track volatility, you need to make sure that you stay up to date on the VIX, which is VIX, which stands for, it's basically the volatility index that tracks volatility in the market, which will increase when there's a higher fear that the market's going to crash. So let me give you a short little description here, guys. When people are scared the market's going to crash, I mean, we're still at this point right now. It's just not as bad as it was a couple months ago. I mean, I still think the market's going to crash extremely hard, and I can't wait for it to happen. But when people are more scared, or when there's more people, shall I say, that are scared that the market's going to crash, then the volatility picks up. You only see volatility. Let me put it this way. You only see extreme amounts of volatility when the market's going down, okay? When the market's in a bull run and it's just going up, there's no volatility in the market. It's basically stagnant. It's when the market starts to change directions and go down that volatility increases and people become more worried that the market's going to crash. And when that happens, well, when that happens, you're usually going to see the price of the stock market going down. Duh, right? But when the volatility increases, the market goes down, what's going to happen is the volatility index, which is VIX, that will start increasing, which is kind of a secondary or maybe a third indicator that A, volatility is increasing, B, watch out, things might start becoming faster paced, faster moving. And when that is the case, the inverse ETFs, as you were talking about, will start performing very well. You'll start seeing them go up. As Mr. JA here in the chat on YouTube has mentioned, TVIX is up. The reason TVIX is up is because the volatility index is up. TVIX is not up. Well, it is, but it's not up only because the market's down. It's up because the volatility index is up. And the volatility index only goes up when the market goes down. So there's like three things. Market goes down, or selling pressure in the market. So there's three things here, right? Selling pressure in the market increases, which drives the price of the stock market down. So that's first. Then third is once the market goes down, volatility picks up. That's the volatility index, VIX. That's second. And then the resulting factor of the market going down, volatility index increasing, drives inverse related ETFs to the stock market up. So that's your three things. First, stock market goes down. Second, volatility index increases. Third, inverse related ETFs known as VXX, TVIX, UVXY. QQQ is an opposite one, but regardless, all those will start being affected dramatically. But if the market is stagnant, if the market's going up and the market is stagnant, even if the market traded sideways, this is the most important part that I think as a beginner you would need to know is if the market is stagnant, put it this way. This is completely, for the most part, unrealistic, but it'll get the point across. If the market just went sideways, and when I mean sideways, I mean it just back and forth. Literally, it happens, but still. If it just went sideways, okay, and didn't really move that much, just sideways, right? What we know, or what you've been taught to know, either from me or someone else, is that if the market goes down, ETF like TVIX would go up, right? And if the market goes up, a ETF like TVIX would go down. So we know that if the market goes down, it goes up, and if the market goes up, TVIX goes down. So we know that it kind of plays an opposite role, right? But what role here, hold on, what role does it play when the market goes sideways? Aha, this is where people kind of get thrown off, is that even if the market went sideways and didn't do shit, did nothing, TVIX would still go down. And that is kind of your danger or your risk factor when playing an ETF like that. is a newer trader may not be aware of the characteristics that are incorporated in these ETFs and how they play. And if you don't, you could find yourself holding one of these ETFs. And even though the market's not going down, your ETF is. Even if the market's slightly going up, it still might be going down. Or sorry, wait. Even if the market's slightly going down, TVIX may still be sideways or even trending down too. That's because volatility inverse ETFs naturally have leveraged ETFs have what we call a decaying factor, which means over time they will tend to lose value regardless. Okay, so it's only when you're seeing a significant move in the market down will these go up. And to answer who had the question there, VIX is good when above 18. JA, yeah, kind of. Personally, for me, I like the VIX, or I like the ETFs like that only when the market is above, or sorry, when the volatility index is above 20 to 25. You can still make good money trading it when the VIX is at 18, but personally for me, if the VIX is at like 20, 25, 30, you can bet your ass I'm going to be focusing solely 100% on TVIX or UVXY or one of those. Because if it is, and the volatility index is above 20 and 25, I can guarantee you that those ETFs are going to be hauling ass. They're going to be moving, okay? Other than that, I won't pay attention to them. So anywho, that's all I have for you guys today. So hopefully that helps. Hopefully you guys like that. Always please do give a like, share, subscribe, thumbs up. If you haven't already, do appreciate it. It helps me grow my channel, help me reach more people. If you want to stay linked in with our private group, it's the first link in the description below. And then you can also join into our free chat room and Facebook group, basically anything to stay in touch with the trading community that I'm involved in. It's all below. Other than that, I'll see you guys all tomorrow morning. All right, take care.